Hi, welcome to the Market Alert for Tuesday, the 18th of November 2014. Starting off with Monday's price action in the 5-minute chart, you can see, as ever, we've got the market finding support pre-market at the psychological 17,600. You can see there how the market sat on this from at least an hour and a half before, if not more, before the day session actually opened. So you see the buying coming into the market. We get a buy signal as well. So we got the triple X there. We see the market trying to move higher and is then met with selling. But notice how the market sits on the Friday low there. You can see it was a resistance here. It's now become a support level. The market trades up and hits the 20-point scalp, and then comes back to find this level again as support. And this is important, always keep looking left in the price chart and you'll find the clues as to where the market is likely to trade going forward. So again, we see this support coming in, the market remains above the entry price, and we see prices driving through the scalp area there and then moving on up to and trading through and then closing back below the 17,760. Again, the power of the psychological levels. So you can see there, and again I've shown this in a live video, how I use the psychological levels as sort of the next upside target for collecting profits on either the up or the downside. So now we have this resistance here, this natural psychological resistance. We have a sell signal, and I'm just going to mark this up. We see the market then coming down, filling the order, and then trading back. And the great thing here is that we have this buffer being the resistance level, which the buy trade actually traded up to and stopped. So we see the market there struggling. We then have another sell signal, but we're already short in this market. We've already sold this market, so these two signals here are void because we're already short off this one. So we see the market then trading down to the low. Look to the left, what do we find? We find support. So here's a clue that this market is struggling to move lower. So worst case scenario in this, you should consider moving the stop to break even. We see the market trading back because we've got this support to the left. We've seen the buying come into the market and then the market hold at this level. So then prices work their way back up, trading back up to the psychological level. You can see the market there going through this time, and then you can see this bar here in particular coming back and sitting on the support there of the 17,650 before then driving up, and then we see some buying coming into the market and the market stopping at the Friday high, again a resistance level. We then get another sell signal coming into the market. This is starting to go into the evening session there. We get a second one there, but you should already be short from the first. See the market trading down, managing to close below the psychological level, this time of 17,650, but only to find the market then coming back and heading back towards break even before we see the market then just going into this sideways trading sessions throughout, and then by 2015 we're getting another sell signal, but this one hasn't actually made any progress to the downside. So again, if you'd have held this towards the end of the session, you will be looking at either a tiny loss or at least a point or two on the table there before the market trades lower. So again, these three signals here are null and void, in particular this one because the sell, you're already short over here. The buy signal comes in at 20 past 8 in the evening. If you'd have taken this, if you felt that there was a chance that the market would continue to move higher, then there is going to be a small loss on this trade. And then of course you've got another sell signal coming in, but we're getting towards the end of the session here. We're in towards the last half an hour or so. So again, not a very good reason to actually take any of these trades, and especially in particular that you've already had the winning trade there. You've got a situation here where you could have used the information that you saw to the left to actually consider getting out worst case break even, and then you've got this short in again, sort of towards the break even. So the chart is not as bad as it looks when you actually take it apart on a signal by signal basis there. In the daily charts, you can see why we're not getting much movement, because the market is sideways in the bigger picture, and this always presents us with a problem in that we don't get the trading ranges that we do when the market's driving higher, as we saw a few weeks ago as the market was moving back, creating the V-shaped correction. A congestion phase is required now for this market before it can actually move higher, and that's what we're seeing at the moment. In the news today, let's have a look. We've got the CPI up and RPI out for the UK, PP inputs. What we got from 130, that's what we're interested in. Core PPI month by month, that's the only high impact news item. 3 p.m. we've got NAHB housing market index that's coming out. It's a forecast to show a 1 point increase there, and then Kocha is speaking at 6:30 p.m. so be warned there, and also Forbes. So you could get a bit of activity around 6:30 this evening as well. It's medium impact, but you just never know there. On the implied volatility front, slight increase on Fridays, but the historic volatility starting to work its way back down. Ideally, this needs to be below the yellow line of the implied volatility there. Right, well, that's it from me for this morning. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching. See you in the next one.